Alarm. The fraud was detected. Detective agency Kravchenko comes for investigating the case. Case. Name Patisserie Valerie. Employees 1,300 staff. Stores 206 outlets. Total losses due to fraud £94 million. Key figures are: Chris Marsh, the former finance director of the Patisserie Valerie chain. Luke Johnson, the former chairman of bakery chain Patisserie Valerie. Let's start from the historical background of Patisserie Valerie. Patisserie Valerie all started with Theophile Vermersch, Theo. He first came to London with his family, as refugees from Belgium in the First World War. During this time he worked as a pastry chef. The family returned to Belgium, and in 1922 he married Esther van Gijsekum. Together they returned to London, and opened a Belgian patisserie in 1926 in London as Soho, and called it Patisserie Valerie. Theo ran the bakery, and Esther looked after the finances and front of the house. Esther was fondly referred to as Madame Valerie by her customers. In 1941 the patisserie was bombed, but reopened in Old Compton Street soon after. The chain has expanded rapidly since 2006, growing from 8 shops in 2006, to 192 as of May 2017.
As early as February 2018, when the company's shares hit new peaks, the CEO, the CFO Chris Marsh, and the non-executive director cashed in shares amounting to almost £5.9 million.
In retrospect, it now seems as if the events were foreseeable. In June, various members of the board again sold £7.2 million worth of shares. After Patisserie Valerie bosses sold £13 million shares months before the scandal, why no one suspected something was wrong? October 10. The company informed the market that management had been notified of accounting irregularities that would have a significant impact on the company's cash position. Losses for the chairman of the supervisory board and the largest shareholder Luke Johnson were estimated to be £100 million. Later the same day, it was announced that the company owed HMRC £1.4 million in tax. October 11. The company announced that there was a material shortfall between the reported financial status and the actual financial status of the business.
Without an immediate injection of capital, the directors were of the opinion it would not be possible for the company to continue.
October 12. The Hertfordshire police issued a statement that a 44-year-old man is arrested on charges of fraud as a result of counterfeiting company accounting. Turns out it was the company's finance director Chris Marsh, and the investigation was launched. That is when cakes started to sink. Our investigation moved to the next year. Patisserie Valerie went into administration in January 2019 and was bought for £5 million by Causeway Capital. Making some interrogations, we found a breakthrough. Look at the scheme. KPMG and Grant Thornton's relationship with the confectionery Patisserie Valerie may indicate a conflict of interest. Furthermore, we get the PwC forensic review. As you see, it shows which indicators are wrongly stated in Patisserie Valerie balance sheet. Tangible and intangible assets overstated by £23 million. Cash overstated by £54 million. Prepayments and debtors overstated by £7 million. Creditors understated by £10 million. He could ask what was done to commit the fraud.
An investigation by PwC commissioned by the company's board found that the suspected £40 million fraud involved finance staff and a supplier enlisted to provide fake invoices for refurbishment work.
So fictitious sales had been recorded, minutes had been forged to secure overdrafts, and invoices for shop refurbishments had been faked. So, who was responsible for committing the fraud? This failure is disappointing on many levels.
Firstly, it's disappointing that an accountant could potentially have manipulated the books and records to such a degree, both the motivation and carrying it out undetected.
Secondly, it is disappointing the auditors were blind to it. They may not be there to detect fraud, but seriously, a material error of this magnitude should have been staring them in the face, if the right questions were asked.
They even awarded Patisserie Valerie IPO of the Year in 2015. Thirdly, it is disappointing that the executive director, Luke Johnson, British entrepreneur, Sunday Times columnist, did not have the executive oversight he should have.
The chief financial director, Chris Marsh, seemingly played the main role in the fraud. While the company still believed it had £24 million in the bank, it was already almost bankrupt and failed to pay a tax bill amounting around £1 million. And how about the motivation to commit the fraud?
We have a clue that mostly it was made to cover up the traces of inconsistencies in financial indicators, failure of successful business, and bad leadership.
And finally, which factors failed to prevent the fraud? Ultimately, corporate governance was the area of greatest failure.
The weak control environment spanned across Grant Thornton, CEO, CFO, and the wider finance function, and poor oversight from Luke Johnson as executive director. The auditor failed to flag the irregularities, for which it faced serious consequences.
Recommendation from detectives. Companies need to have a system that enables employees to report irregularities.
Many employees fear retaliation when reporting abuse within their company. To help alleviate this fear, it is advisable to implement a confidential whistleblowing system that provides whistleblowers with adequate protection, total anonymity if required. Only by having effective internal systems for reporting misconduct can companies identify risk at an early stage and take action.
What were the consequences of the fraud for the parties involved?
The Serious Fraud Office has been investigating Patisserie Valerie and made 6 arrests.
Chris Marsh was suspended, subsequently resigned, then arrested, bailed, and was under investigation by the Serious Fraud Office. Luke Johnson is one of the biggest financial losers from the collapse, as he made a £10 million unsecured loan to Patisserie Valerie at the height of the crisis and is a creditor of the PLC. KPMG was also subject to an investigation into materials provided by the Big Four firm to the FRC during its review of the firm's Carillion audit. Creditors to the failed chain have so far received none of the money they owed. More than 100 outlets were closed and hundreds of staff lost their jobs. That's sad.
There is a British proverb that perfectly describes the situation at Patisserie Valerie: you can't have your cake and eat it too.
In essence, it means that you cannot physically keep your cake and at the same time eat it, because once it is eaten, it will be gone. In other words, you shouldn't ask for more than you deserve or is reasonable.